Hello, everyone, and welcome to part 2 of 5 of my personal finance for recent graduates. This time I will be going into credit score. To begin, we have to understand what a credit score is. So, a credit score is a rating that a financial institution uses to determine how likely you are to pay off your debts. So, what is a good credit score? A credit score is just a number from 300 to 850 typically. Anywhere around that 700 number is a good credit score. Anything above, you're doing very well and you will be able to secure the loans you want and get possibly lower interest rates for that. Anything below 700 and they might flag you for a credit risk and you could have a tougher time securing the loans that you want. And we'll go into that later about what all the numbers mean. There are two main companies that determine your credit score. These two companies have models that are the Vantage model and the FICO model. Understanding how these companies determine credit score can be very helpful for you in the future if you want to get your credit score up and secure those loan payments that you want. FICO personally does their credit score based on 5 factors. The first of these is payment history. Payment history is the biggest in the calculation for credit score, so making sure you make your payments on time is very important. 30% of it is the amounts you owe. This is how much credit you have out there. If you are using up almost all of your credit on your credit card each month, that's going to negatively affect your credit score. So it's better to keep those low, make those payments, and secure that higher credit score. The smaller ones that go into the calculation are the length of credit history, new credit, and your credit mix. So it's important to still be taking new credit cards if they make sense for you, but also keeping those old ones to keep that credit history out there and help boost your score. So why is a credit score important? I've already touched on a few of these, but they can help you secure lower interest rates on loans. Many renters look at your credit score to see if they want you renting out their place and you will actually make your payments. You'll get better credit card offers and higher credit limits as they deem you more trustworthy with a higher credit score, and you'll also get better rates on your car insurance. As a soon-to-be graduate myself, it can be kind of scary to start building credit because you will have a pretty low credit score to start off. There are, however, some ways that you can navigate around this and make it a little easier on yourself. One of those ways is to become an authorized user on someone else's credit card, typically your parents or someone that is older than you that will be able to make those payments consistently. For an authorized user, the primary card holder, so your parent or whoever you choose, is the one that pays those debts, but it also, your name is on the card, so it boosts your credit score while they're making the payments. Another way would be to get a secured card. These need no credit history, and you put down a security deposit as collateral just in case you do not make your payments. The other option is to find a credit card geared for new credit users. There are many of these out there. They have credit cards for college students, recent college graduates. They typically have lower credit limits and smaller cashback offers, but they still will contribute towards your credit score. There are a few other tips and tricks to improve your credit score. These would be reviewing your credit reports. They like to see that you're looking over those and paying attention. Pay your bills on time. That one's probably the most simple. Don't let those get past the deadline and start accruing interest, making you pay for payments that you did not put on the card. Use 30% or less of your available credit. So if you are using up all that credit, They will see that, and you're going to be less trustworthy. That kind of goes back to how the credit score is determined. Limit your request for new credit. When you find a card that you like, try to stick to it. You don't want to be opening and closing a bunch of credit cards. You want to pick a credit card and keep it open until the end of time to keep your score up. And that kind of goes into that last point of keeping your old accounts open. And that kind of wraps it up for this lesson. Next lesson will be part 3 of 5 of my personal finance for recent graduates. And we'll go into saving for retirement. Thank you.